Well, for those of us who like Tesla and love Elon Musk, the morning has started off a lot better than yesterday. And but who knows where things might trend. But um, Tesla is up strongly this morning in a market that's mixed, with the Nasdaq up a tiny bit and the rest of the market down. Bonds a little bargain, I mean, sorry, profit taking in the bond category, with bond yields up a tiny bit. Pretty much a flattish morning, and the news overall is also flattish, not showing us any new indications of a pending recession. In fact, quite the contrary. So let's go ahead and dig into it. But let's start with some of the fun stuff that happened overnight with regard to Tesla. It seems like everybody is going to buy themselves a new Tesla vehicle. So this is a statement. I'm sorry, this is Sean Hannity just bought a Model S Plaid as support for Musk and told his entire massive audience how great the car is and about his reasons for buying it. That was a really, really good commercial. And then we have the President of the United States who says that he is going to buy a Tesla in support of Elon Musk. And then to add to the group, we have Brian Kilmeade, who comes out and says he thinks all Republicans are all people of goodwill. I didn't see, I don't remember his exact words, but he says everybody should go out and purchase a Tesla in support of Elon Musk. Now, that might have something to do with the fact that Tesla is up very strongly this morning, but there's additional news over on top of that. It's up 4.76 as of this exact moment, but we'll come back to that in a minute. I did want to comment on this, though. We have a real, what you call it, a divide in America. Did you know that? And I think it's really been made super clear by this current sets of heroes. We got two sets of heroes going right now. We got the Democratic hero. His name is Mahmoud Khalil, yes. And he hates Jews and he loves Hamas, and he breaks into buildings, and he I don't know, interferes with Jews getting to classes, and creates all kinds of chaos at, I think it's Columbia, which is where he's been doing these things. And the United States says that they don't want him here anymore because he's, I guess, a green card, or permanent person, not a citizen, a permanent resident maybe. Anyway, but the ICE picked him up and wants to deport him, and the liberal the liberals are just out there pounding. Oh my gosh, you can't send this guy away. Oh, he's fantastic. We need to keep this guy. This is just wrong, 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 wrong. Well, and then we have the Republican hero on the other side who loves America, builds super useful products, is doing absolutely, working for free right now to help save the country from going into bankruptcy. And the liberals hate him. The conservatives love him. I don't know. How do you feel? Let me know in the comments below. How do you feel on that particular divide? Oh, by the way, Elon Musk supports Israel, and this other guy supports Hamas. Okay, well, let's see. Let's go on. Ron Barron says he will not be selling a single share of Tesla out of his own personal account. He did sell some last year. He says, like Kathy, he didn't say like Kathy Wood, I'm saying like Kathy Wood, but he said it was too high a percent of the portfolio that he manages for others. And then we've got, let's see here. This would be Tesla is below the election price. This is Morgan Stanley. Morgan Stanley. Yeah, Morgan Stanley. Oh man, I hope I got this right. It could be Goldman Sachs. I'm pretty sure it's Morgan Stanley. It'll show up, and maybe it'll show up in the news down here. Okay, so it says Tesla is below the election price. It'll go to 200 and then 800. Tesla shares have fallen 50% from the December 17th highs, down 40%, 45% year to date on poor sales data, negative brand sentiment, and market degrossing. We see a pullback as a buying opportunity for embodied AI compounder numbers. Tesla's delivery data has been below expectations this year, driven by competition. Maybe he means in China. An aging lineup. What? And buyer strike from negative brand sentiment and upcoming new product. According to Bloomberg, Tesla's January sales were down 45%. Tesla China seeing more meaningful slowdown. Okay, I'm going to skip over this. I should have edited this. Narrative. Having covered Tesla for nearly 15 years, we find that the investor narrative around the company tends to follow the share price. In December, with the stock testing $500 a share, the prevailing sentiment was that the company is an AI winner with untapped exposure to embodied AI expressions such as humanoid robotics. Today, the stock down 50%. Our investor conversations are focused on management distraction, brand degradation, and lost auto sales. Volatility, they say. Given the upcoming catalyst and the nature of Tesla's trading history, we see our scope for the shares to test the 200 bear case and also test our 800 bull case within the next 12 months. We expect the key drivers of the stock will continue to include a wide scope of forces ranging from commercial, macro, geopolitical, technological, strategic, and management specific. There are specific catalysts that we would pay attention to. The Austin Robotaxi unveil would mark the first commercial customer-facing example of steering wheel-less vehicles. Related to this milestone would be a pull forward of updated federal rulemaking around autonomous technologies. There would be the AI Humanoid Day, demonstrating the latest capabilities of Tesla's Optimus, is something we expect before year end. Wait, it sounds like me. There are other technological and commercial milestones, some of which involve cars, some not, that we expect will matter for the stock over the next 12 months. Overall valuation, the pullback of the stock has brought Tesla to 19 times full year 2030 PE and approximately 10x the EV/EBITDA full year third quarter. Tesla enters our top pick in U.S. autos and shared mobility, given our expectations for earnings growth. All right, the 𝐄𝐦𝐚𝐢𝐥 letter this morning says, breaking, Tesla stock rises over 6% from its overnight low and turns positive as President Trump says he's planning to buy the vehicle. Let's all buy a Tesla, says Kilmeade. It'd be funny if this ends up becoming the start of a buying spree of Teslas in the United States. That was the rest of the story that I somehow put in the wrong place. Tesla Chan has this morning. Tesla China insured units, 13,800. This is a solid number, not a great number, but you don't know how many were exported. Remember, these are only the units that were sold in country. And so 13,800 is, if that was 100%, if there was none exported, it would be a so-so number. If there was some exported, it could be a great number, actually. And that Tesla Chan says, I hope the turnaround time begins. Let's cheer up, everybody. Today's brutal Tesla sell-off will go down in history books for Tesla investors as a painful day for the bulls, including us. The protests at Tesla dealers over the weekend, violence seen as Tesla drivers around the country, Europe, and more Musk-related brand worries and distractions related to Doge. This is, by the way, this is Dan Ives. Dan Ives is saying, it's been brutal. The Trump administration has been an albatross over Tesla stock with a horrific 2025 so far. They maintain their outperform and 550 price target. After the Trump-related gains for Musk and Tesla past November elections, we have seen the fury and hate around Musk in some circles globally take over the street narrative for the Tesla story, and the stock is reflecting a much more dire path forward to the Tesla name. However, if every time we threw in the white towel on the Tesla name when it got hot in the kitchen, we would have missed one of the most transformational growth stories of modern history. Is this a pleasant time for Tesla bulls? No. Clearly, the Musk Doge distraction and brand issues have taken on a life of their own, and that has created a black cloud over the Tesla stock. Well, this is a gut check, he says, moment for the Tesla bulls, including themselves, after the massive sell-off. The bears own the Tesla narrative right now, and lackluster sales numbers from Europe, China, and the U.S. are not helping. But this is the bull thesis in a nutshell. This is the start of the biggest innovation and technological cycle in Tesla's history ahead over the next few years. We expect a lower cost sub $35,000 new model before the summer that will help drive pent-up EV consumer demand globally and get Tesla back on the growth track. A 2 million run rate is their expectation. the launching of an unsupervised supervised FSD in Austin, Texas this June, etc. Autonomous will be the biggest transformation to the auto industry in modern day history, and our view is that Tesla will own the autonomous market in the US and globally. We believe other automakers will OEM Tesla's FSD technology over the next few years, and this will be part of the autonomous flywheel that Musk and Tesla create, with Cybertruck also set to launch over the next year. We believe that Autonomous and Optimus will represent 90% of the valuation of the Tesla story. And he said, but let's address the elephant in the room, the Musk-Doge situation. While the Doge-Trump-Musk ironclad partnership has created major brand worries for Tesla, and don't expect it to go away. Elon Musk, as you know, is a focused guy, and he's not going to finish. He's not going to go away until he finishes it. We estimate less than 5% of Tesla sales globally are at risk from these issues, despite the global draconian narrative for Musk. Importantly, we expect Musk will be better balancing his time between Doge and Tesla over the course of 2025, and that some of the distraction issues will fade. We continue to believe the best thing that ever happened to Musk Tesla was Trump in the White House, as this will create the deregulatory environment within the federal autonomous roadmap central to Tesla's strategic vision. Although it feels like pain today. This is Randy Kirk. You know what to do. Like, subscribe, notify, and join Patreon. The National Federation of Small Business, NFIB, Optimism Index fell by 2.1 points in February to 100.7. This is the fourth consecutive month above the 51-year average of 98 and 4.4 points below its most recent peak of 105 in December. The uncertainty index rose 4 points to 104, the second highest ever recorded, the second highest level ever recorded. So what we have here is that the small business people got extremely excited by Trump coming into the White House, by what Musk is doing. They were showing tremendous amounts of optimism, record high optimism through December. But as predicted here on this channel, we've had the chaos and the uncertainty. This is a known fact. We know that this is how the Trump administration operates. So the chaos and uncertainty has resulted in these business owners, these small business owners, being less optimistic, but not that bad. Still showing overall optimism. That would fly in the face of all the expectations about that have come out the last week or two about a recession, and even fly in the face of my expectations of the recession. But keep in mind, my expectations of the recession don't have anything to do with small businesses. It has everything to do with the cuts at the federal government level. My expectations have nothing to do with the tariffs. Quite frankly, zero to do with the tariffs. It all comes down to the fact that 23 to 25% of the U.S. economy is what? It's the federal government, okay? And that taking away $1 trillion of the total sales, if you will, of the federal government is going to impact the economy, and I think it might go negative. That's my whole thesis, okay? And there's a ripple effect to that. That's the thesis. Okay. And so the government is about 23%. The federal government is about 23%, but small business is 43%. So maybe, the small business people, if consumers buy, now that is a piece of the uncertainty out there. If consumers don't buy, if consumers pull back, then, it can impact the entire economy. But I think that any consumer pullback will be short-lived. That's my thesis. Uncertainty is high and rising on Main Street, and for many reasons, says NFIB Chief Economist Bill Dunkelberg. These small business owners expecting better business conditions in the next 6 months, that dropped. The percent viewing the current period as a good time to expand fell, but they remain above what they were before the election. Inflation remains a major problem, ranked second behind the top problem, which is always recently labor quality. Key findings include the net percent of owners expecting the economy to improve fell 10 points, but it was still a net 37%. 12% seasonally adjusted if owners reported it's a good time to expand their business. Now that was down 5 points from January, but it's the largest, and that's a large, very large monthly decrease. 16% of owners reported that inflation was their single most important issue, labor, as we mentioned, being the next. The net percent of owners raising average selling prices rose 10 points from January, not a good sign. This is the largest monthly increase since April of 2021. Seasonally adjusted, a net 29% planned price hikes in the next 3 months, up 3 points. Labor costs reported as the single most important problem for business owners, that rose 3 points. The frequency of reports of positive profit trends was a net negative, so their profits are apparently not doing as well. A net 2% of owners reported their last loan was harder to get than previous attempts. The last time the reading was this low was February 22. So these people, as I've reported over and over again, they're not having any trouble getting the money they need to run their business. And only 24% of all owners reported borrowing on a regular basis. I have emphasized this over and over and over again. Nobody talks about this, but small business owners are old now. I'm just telling you, it's the baby boomers and the ex-gens who own all the businesses, and they have plenty of money. Their house is paid off. They've got money, and their spouse is working, and the spouse has a pension plan and medical care. These people are not hurting for money. Okay, this from Market Watch this morning. Citygroup has now joined the camp. It said downgraded U.S. equities to neutral from overweight are bullish. In our call of the day, a team of Citi strategists led by Dirk Willer said it is now clear that U.S. exceptionalism is at least pausing. Alongside this shift, they cited China upgrades stocks to overweight, which in balance now leaves their overall global equity view as neutral. Willer and the team explained that 2 of their bear signals have now been triggered for U.S. stocks. One was the S&P 500 breaking its 200-day moving average at a time when the market, it was extended. Yeah. The second signal has triggered by massive straight soft sessions for 4 of the 7 called generals, referring to the major technology stocks that have been leading the market higher for the past 2 years. Magnificent Seven. Already mired in a tough year, the Magnificent Seven grouping of large technology stocks collectively lost $759 billion in market cap on Monday, the biggest daily loss of market cap on history. Apple and NVIDIA led Monday's $750 billion tech wreck. And then how would you play the aftermath, they say? Yeah, okay. That was the end of that story. The JOLTS came out just before we came on the air, showing little change compared to last month. The good news, however, is the number of job openings. Now, listen. So what we have is month to month, little change on all their categories like job openings, layoffs, etc. All little changed. But now listen to the revisions. Got to pay attention to the revisions. The number of job openings for December was revised down by 92,000. The number of hires was revised down by 88,000. The number of total separations was revised down by 187. That's good. Within separations, however, the number of quits was revised down by 102,000. That's bad. Why quits are bad? Because when you have a lot of people, when a large percentage of the people that are leaving their jobs are because of quits, it means that they feel confident that there's lots of jobs out there to go get. Well, that confidence is much lower, so your quits are way down. And so all the numbers that they're talking about that are flat, they're saying flat this month, all were revised downward from last month when they said it was flat. So the revisions matter, and people don't look at the revisions. So what overall, what does this tell me? Overall, this tells me it's still soft out there. I'm still saying because of the government cuts, which I said earlier, because of the government cuts, we will see a very flat economy and potentially a recession that will potentially last less than 6 months, and then a massive rebound in the fall. Cathie Wood's ARK Invest was out again this morning, reiterating their exact same indications that we will see 3 or 4 rough months, maybe, and then away we go to a very strong economy. Now, if the market sniffs that out, then the overall market should be going up strongly ahead of that, which means I'm thinking by May, we should start to see the market really screaming higher. All right, the Tesla this morning, well, it's lost a lot. So, yeah, it's been up and down, but Tesla is still outrunning the pack, still up 1.12%, which is $2.49. And we've got the Dow Jones down just about 1%, the NASDAQ down 0.39%, and the S&P down 0.63%. And it was all of them are going down. Everything is going down right now after being better this morning. The NASDAQ was up and is now down. S&P was up a little bit and now down. We've got the Magnificent Seven with Apple leading the way again, down 2.16%. The rest of Magnificent Seven is, Google's down a little, and now NVIDIA just went positive. So it's Google and Apple down, the rest up, and the Cathie Woods all down except for Square again. Square doing quite well, apparently. I'm not going to, I don't have enough reasons to go find out why Square is doing well. Things are now tipping. The little thing at the, it's kind of, everything is like looking like it's bottoming out. That doesn't mean anything. We know that it could just absolutely turn around and start going down again in a few minutes. But Tesla is doing a little better. 225 is the total, the share price for Tesla right now. Okay, let's go find out. I believe that the bonds are not doing what I want them to do this morning. The 10-year is up 2.7 basis points at 4.24. Good news is it's not back to 4.25. Bad news is we need it to go to 3.99 and then even lower. Well, wait a minute, man. I think maybe my app hadn't refreshed, but the bonds all of a sudden have dropped. When I say dropped, the interest rates have dropped. So the rally has started in bonds. So it's way better news than I thought. 0.8 of a basis point down. So now we're at 4.20. So there you go. Good news, a little good news to share with you there. Breaking good news. The 2-year is down 2.3 basis points, and the 2-month is unchanged this morning. So, all right, that was a good piece of news breaking here on my channel live. Okay, well, not exactly live. Oil up 77 cents this morning, but still 66.80. Good number, expecting 59 soon. Brent up about the same amount. Natural gas down 0.31% after it had been up strongly earlier this week, $4.47. Gold has pushed over 2,900 again. Over 2,900 again to 2,922. Silver up strongly this morning, up 2.11% at 33.21. Copper up also strongly, 2% at $4.76. Those are interesting. And then we've got Bitcoin up 1169, but still under 80,000 at just barely though. Actually, just popped over 80,000. Let's call it 80,000 even. And that's what is happening this morning. What happened? What's happening the rest of the day? Today will be Nicholas Gibbs, as always, at probably about 5 o'clock. And then Brian White will be at 7:45. That's supposed to be exactly. I assume it'll be exactly 7:45. Last night, I substituted in Phil Basil, and that would be a good one for you to go and check out. Very interesting analysis of how the major companies for Tesla will all be combining their efforts, so to speak. Lots where Tesla in the past might have gone to SpaceX for help with regard to metallurgy or something like that, and SpaceX might have come over to Tesla for help with regard to some tech that they needed. No, it's going to be way more intertwined with products being developed, co-developed products with buying and selling products and services from one another. It's going to be a much bigger, and that's very interesting from our friend Phil. So take a look at that. I'll leave that card. In the meantime, it's been great talking to you, and we'll see you later today.